Good morning, traders. Today is the 2nd of August. My name is Neville Hornsey, market analyst with YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How you doing?
I'm all right, mate. How are you doing?
Very good. I've just realised we've got a bit of a lag, so I'm going to edit out the pauses. So yeah, all good.
Okay, all right, fair enough.
Yeah. So how are you doing? You good?
Yeah, man. We were just saying this, but I'm in Tenerife at the moment, so I'm enjoying life.
Mm-hmm. Are you staying in a hotel or an apartment?
Currently with my girlfriend's family at the moment, so yeah, just staying at their apartment.
So
but,
how is the COVID
the
situation?
Weather is good.
Yeah. How is the COVID situation?
Well, actually, I don't really understand how it works over here. There are these alert levels, and they're at one of the kind of middle to kind of higher ones, but they're not in lockdown. I mean, it's pretty similar to the UK, to be honest. Although there's a few more restrictions, I would say. Like you have to, I don't think you're allowed to do indoor hospitality, and there's like a restriction on the number of people you're allowed per table, like in a cafe or something. But aside from that, it feels mostly normal. Everyone wearing masks still.
Okay.
Yeah.
Like walking around with some folks this weekend, it was a real mixed bag. Like sometimes the venue asked you to wear a mask. Sometimes you just walked in and nobody was wearing a mask. It felt a bit weird. So yeah, it's kind of in between around where we are. So it's as long as you've been told.
It was a bit of a free for all when I left.
Yeah, it is definitely. All right, cool. So markets are busy this week.
Markets.
So we've got like a
very busy
new month, new week, new lot of information. Monday today.
Yeah.
The tier 1 data I've got down is ISM manufacturing PMI. Have you got anything else you want to talk about today, or is it just that?
I think that's the main thing for me, definitely. Things really start getting busy later in the week, though. Obviously, I mean, if we're starting with the US, it is jobs data week. So we've got ADP on Wednesday, and then we've also got ISM services on Wednesday.
Yeah.
And that's all comes ahead of NFP on Friday. So yeah, it's going to be a big week for US data. Potentially quite a lot of volatility on all of this.
Yeah. And looking at the forecasts, the calendar that I'm looking at has got the forecast for ADP down from previous month, whereas NFP, they're still gunning for more. So it's kind of a mixed outlook on the actual, because normally like you would expect ADP to sort of lead, like expectations for NFP, but they seem to be at odds with each other.
Yeah.
But with vaccine rollout and stuff, we should have more, surely. Surely we should have more employment.
Yeah, it should be a strong jobs report. That's what everybody's expecting. I mean, I can't really see why it wouldn't be a strong jobs report. I mean, perhaps, in the last month, infection rates have gone in the US. Maybe that could weigh a little bit on employment. But yeah, I mean, I'm certainly expecting quite a big number. Maybe not a million. Some people are calling for more than a million. But similar to what we saw in the last couple of months. But to be fair, the market reaction, you might expect, if it's a good number, you might expect a bit of a hawkish market reaction, maybe like dollar strength. But I don't know if you saw this, but Fed's Brainard, one of the most important members of the Fed, was actually playing down the importance of this jobs number. And even the August jobs number, she was talking about how she wants to see the September jobs number before making any decision on tapering QE.
Is that why December's kind of now being muted as when the first rate change will, if they're going to wait for the next 2 or 3 months?
Yeah. I mean, if exactly, like last week, people were talking about potentially any Fed meeting until the end of the year could be used as an opportunity to announce this tapering. But after Brainard's comments, and she is like a core member of the Fed, she does kind of represent like the consensus thinking usually. After her comments, I mean, I think they're a bit dovish. So maybe they're weighing a bit on the dollar this morning, like the dollar's a little bit lower.
Yeah, if I just share a screen.
But yeah.
Let's have a look at the dollar.
Let's have a look.
So dollar is currently sat above the daily 200 EMA, and the 50 was support the last Thursday, Friday. So after the sort of Fed meeting, obviously, like you say, Dovish unwound some of the grind higher, but that sort of period from the end of June, after the June announcement, we had the pullback, that little pullback there, and the moving averages have acted as support so far. So I guess if we get a lower low than Friday, then we get the collapse. And if, like you say, Brainard and a few others start coming out, or if we have like a poor ISM today, that might give the market a bit of impetus to just test the lows of Friday, and then it's a big volume gap. So so it could come down.
It is. There is a potential. I think, like personally, the way I see, I mean, potentially with the ISM PMIs, they could be a little bit weaker because, everyone's talking about the peak growth rate having already been hit. And now the growth rate per month is kind of slowing down a little bit. And that does suggest that the ISM PMIs might continue to sort of moderate. But I think jobs data is going to be good, which I think means the dollar probably still is a good buy on the dips, especially with all this support from the DMAs. But if it's not a good jobs data, man, if it's like, imagine if it's only 200K or something like that.
Yeah, big surprise.
Yeah, we could see some selling.
Yeah, definitely. Okay, so jobs, we've got also New Zealand jobs employment change tomorrow. How do you see that affecting the rate decision that might occur from the RBNZ this month?
Yeah, I mean, in terms of the importance of the jobs data there for the RBNZ, it's actually much higher than this week's US jobs data is for the Fed, because in New Zealand, they only report jobs data once per quarter. So this data is the jobs data for the whole of Q2. And I think most people are kind of looking at it like, if this data is good, then the RBNZ is going to hike rates this month. So things are pretty juicy in New Zealand, to be honest.
Yeah. Okay, so RBA statement.
Tuesday morning. It's going to be
more hawkish than expected is good for the currency. Do you see them being more hawkish?
Nah.
They've been in lockdown and they're extending it. It's just like, I don't understand.
Exactly.
China's crushing their iron ore. It's like,
Exactly. Like everybody's been, how would you say? Basically, the forecast for GDP growth in Q3 in Australia, most of the local Aussie banks are now calling for a recession. So it's like, man, they can't be hawkish. They have to be dovish. So markets are expecting them to unwind some of their recent QE tapering.
Yeah.
I mean, there is potentially the chance that they could be a little bit more hawkish than the very dovish expectations, but they're not going to be hawkish. They have to be more dovish than they were before.
Yeah. Well, looking at the active trader sentiment indicator, 70% of traders are bullish the Aussie versus the US dollar. So I think they get squeezed. So that's another down for the Aussie. And then last week, I did a video saying how this consolidation area here on the British pound versus the Aussie looked like it wanted to break higher. And it seems to be, the upper bound of that seems to now be acting as support. So even the British pound is trying to get ahead of the Aussie. So that could pop tomorrow if we do get, like a dovish RBA. Right. What else are you looking at?
Another reason it could pop is because we've also got the Bank of England later this week.
On Thursday,
And the outlook for the UK economy this quarter versus the Australian economy this quarter couldn't be more different. Like the UK's opening up and the economic recovery is, maybe it's not still accelerating, but it's still going really well. I mean, there's a risk that the BOE could be a little bit more hawkish than expected.
Yeah, I guess they're going to be one of the first. So RBNZ, BOE, Bank of Canada are looking like the front runners for tightening, aren't they? Just looking at the UK COVID, 72.5% of the adult population are double vaxxed now. I'm pretty sure the Aussie rate of vaccination is terrible. So if the vaccines are,
I wrote about that last week.
I think if vaccines are the way out,
I think I was writing about that last week. It's like 14%.
That's right. Yeah. So British pound versus the Aussie still looks bullish to me. Bank of England monetary asset purchase facility. I think they might, they might taper that one, because like the RBNZ are tapering their asset purchases. I think that's I don't see the actual rate hike being, put forward, but I think the purchase facilities gets reduced. I think they want to like reduce their borrowing, don't they?
Yeah. And I mean, there's actually a couple of BOE members that want to just axe the QE program like right now. But they will be a minority. But yeah, like you say, there is a risk that they could slow down the pace of tapering, the pace of QE purchases. I think though they might want to be cautious. I mean, it's a bit of a balance, to be honest. I'm not really sure how they're going to play this meeting, because there is one quite important economic uncertainty, and that is the unwinding of the government's furlough scheme, which it began yesterday on Sunday. So that is something we could see the unemployment rate rise in the UK now by not loads, but by a percent potentially, or maybe even more.
Yeah, I think the reports I was reading says like 1 in 5 companies say they're going to start looking to lay off, now the furlough. But I wasn't sure if that was hyperbole to try and get the chancellor to change his mind, or to give them an excuse. Because like I said, like walking around town, there was lots of people out enjoying themselves, lots of people with masks, lots of people without masks, but the COVID rates are coming down. So businesses need to be like unshackled completely so they can get back to work. And there are like job vacancies. There's a lot of people, what is it? The hauliers can't get enough drivers. So I think we need to get people off furlough and then into work.
Yeah, I agree.
I just don't know how many people are available in reality. They might have all gone back to Poland or back to places where they had been like helping us out before. So,
well, that's a good point. I mean, that arguably the UK labour market might even be quite tight, because we tend to rely quite heavily on foreign workers, and obviously all this international travel has been restricted. So, I mean, if people want work, they should be able to find it. It might not be the work they want, but they should be able to find it. Like you say, there's a shortage of drivers, and there's shortages in loads of these other industries, like in we need people to pick fruit and stuff like that.
Yeah. I mean, I just like tried to get some returns back to Germany, and I just emailed the company and said, I haven't heard from you. And they said, sorry, it's still in England. Like, we haven't received it yet because the borders are sticky. There's trouble. There's not enough drivers, or there's, restrictions on movement of goods. So yeah, we need all of that if they're going to stop furlough, they need to grease the wheels of industry and just get everybody working and everything working properly again. Otherwise, it's going to be chaos. On Friday, we've got employment change, unemployment rate, Canadian. I've got oil going higher, dollar CAD coming lower. How do you see Canada and Canadian, just sort of economics, really? How do you see them?
Yeah, I mean, their vaccine rollout has gone very well. They're actually now one of the leading countries in the world in terms of vaccination rates. Like, they're up there with the UK, I think. I haven't seen the latest stats, but I know they're doing well. Oils looks like it should continue to do well, like you said. We're also talking earlier in the video about how the RBNZ, the Norges Bank, and the Bank of Canada, those three are like at the front of the G10 sort of monetary policy tightening queue. So it's like there's quite a few things which should be supporting CAD now. So yeah, let's see how the jobs data goes. And I think, I mean, if you got the dollar CAD chart there, you can see dollar CAD had quite a decent pullback in the last couple of months. Like, it was doing really, really well earlier in the year, bit of a pullback. Now I think there's potentially the room for further downside.
Yeah, definitely. I think with the dollar coming off, oil going higher, like you say, any country with a good vaccine rollout seems to be leading a country that doesn't. So yeah, because I was reading the US vaccine rollout, it kind of plateaued. There's not like as much uptake now, so they're kind of stalling. But yeah,
there's quite a lot of hesitancy in quite a few of the well, it's more the red states, isn't it?
Yeah.
Quite vaccine resistant.
Okay, let's have a quick go through the charts. So euro dollar looks like it's broken out of its downtrending channel. Obviously, dollar weakness. Anything good out of the ECB recently? I haven't really seen anything to sort of justify a big pop.
I mean, we had the meeting? Was it the meeting last week?
Mm. Yeah,
it was. I mean, it was dovish net, wasn't it? It was.
Yeah, so this euro move is more dollar move, isn't it? Really, like this euro dollar is
yeah,
a weaker dollar. Yeah.
Absolutely.
All right.
I think it's more about watching the USD side of the equation for now for euro dollar.
Obviously, earnings. Everyone's pretty much beaten. Was it Amazon that didn't quite meet expectations on one of their sort of metrics? But everybody else.
Yeah, I saw. I need to. Yeah, for the most part, it's been good. Amazon were bad though. I haven't seen their pre-market this morning, but I think after market at the end of last week they were down like 7.5%. But yeah, broadly speaking, earnings have been good.
Yeah. So tech and US 500 currently going higher. Looks like actually S&P is going to touch all-time highs again. I've removed the all-time high. Yeah, I've removed the all-time high little symbol because I got bored of pushing it higher. Gold. I really want gold to go higher, but it's not.
It's going to depend on a combination of the dollar continuing to go lower, or if the dollar goes higher, then gold's going to struggle. And also, you're going to want to see real yields in the US are at record lows pretty much right now. So, yeah, if the dollar continues to fall, gold should hit some new highs, I think.
Cool. All right. Any other things you want to talk about? We've gone through the sort of tier one data on the calendar.
I think we've covered everything, to be honest. I mean, there's a few emerging market events, like I think the Reserve Bank of India have got a meeting, and like Bank of Thailand and Czech National Bank. But yeah, they're not going to affect macro sentiment.
Okay, cool. So we're still buying the dips?
Yeah, I think so. Cool. I think so. There's not any material change that would make me think that we're going to have a more risk-off market tone going forward. I think it's all still very much risk-on right now.
Brilliant. All right. Well, enjoy the rest of your holiday, and I'll catch you next week.
Nice. Cheers, mate.
All right.
Yeah. Speak soon. Bye.
Bye.